Welcome to the Wealth Studying Podcast. This is episode 469. Today is May 2nd, 2025. I'm your host, John Pugliano. I'm also the founder and money manager at investablewealth.com. Well, today I have an extremely short episode for you. My base case remains the same, and I want to focus and emphasize all the good news about the strong and resilient U.S. economy and why we're seeing stock prices rise so rapidly. So here's the bottom line, and this is effectively what I've been telling all my clients. Beginning in about mid-February, the negative economic news campaign began, and the media everywhere, as well as many institutions, began talking down the U.S. economy. And as a result of that, we saw popular investor sentiment surveys drop down to historically negative levels. And then, of course, that negativity was amplified in the media, which further drove down stock prices and put the entire market into a legitimate bear market, meaning that the S&P 500 was down by 20% from its peak, and the other indices, the more volatile ones, like the NASDAQ and the small cap stocks, were down significantly lower. And then, of course, with that contrived investor sentiment and the big drawdown of the market, the VIX volatility gauge spiked up to an extreme historic level at 60. So that's what we saw take place in the market over the last couple months. But what's the reality of it? Well, we see that in the data coming out from first quarter and specifically from the newly released April economic data. Okay, here's some highlights. Unemployment is holding steady at a very comfortable 4.2%, which if you zoom way out is extremely low in terms of the long-term historical average. How about wages? Well, they're increasing month over month, which means that not only are employees being laid off in vast numbers, but it also means that they're still demanding and receiving pay increases. Now, the good news in all this is that from an inflationary perspective, although they're rising, the rise has been slight and it's been less than anticipated. And guess what? Since consumers still have their jobs and they're getting pay increases, well, in April, once again, we saw consumer spending increase, and that's in spite of the fact that it was predicted to decline. Hey, and with all those concerns and worries about inflationary pressures, well, the PCE inflation number that just came out this week actually declined instead of the predicted increase. And so as a result of that, we're seeing very stable and reasonable 10-year Treasury levels right now sitting at about 4.3%. And if you remember just a couple weeks ago, the Chicken Little fearmongers were worried that 10-year Treasuries were going to get up above 5%. And there's been this never-ending concern about runaway inflation and the U.S. dollar is going to decline because foreign investors are going to sell off all their treasuries. Well, obviously, if the 10-year Treasury is sitting at 4.3, which is about the midpoint for the last, 18 to 24 months, none of that gloom and doom is true. And more importantly, and this is the key level that I don't see anybody in the media reporting, but have you checked gasoline prices lately? As I record this, West Texas Intermediate is at $58.34. That's nearly 24% lower than the average from 2024, which was oil at $76.63 a barrel. The veracity of the United States economy is not based on cheap, junky imports. It's based on abundant and reasonably priced energy costs. And that is going to further spur and act as a tailwind to the increase that we're seeing in U.S. manufacturing. So despite all the negative media activity over at least the last 10 weeks, the economic realities are what we're seeing in the stock market today, where literally every major stock market index has bounced up and is above its very decisive 50-day moving average. Now, I don't know if it can hold those levels, but if it does, then this market is going to keep moving up and to the right. But hey, don't expect the media to quit being so negative. Right now, they're really pumping up the story that GDP for the first quarter has declined by 0.3%. And you're seeing some economists actually raising their odds of a recession by as much as 65%. Now listen, I really think this is crazy talk. The GDP model is flawed, but specific to what's being reported now about negative GDP growth, it's nonsensical. We had a one-time surge in imports because so many companies are anticipating tariffs and they're trying to build up their inventory before any tariffs might be initiated. So this one-time surge in imports has skewed the GDP calculation by a reported negative 5%. The reason for that is because the way GDP is calculated, you start off by what's being produced in the country domestically, and then you subtract what's being imported into the country. So that's how they come up with the negative 0.3% decline in growth for the U.S. economy. But think about their circular reasoning. What they're really saying is that these imports have negatively impacted GDP by 5%. And so if you subtract 5% from their negative 0.3%, you come up with a positive 4.7%. Noodle that around in your mind. Effectively, that means the underlying U.S. economy in the first quarter actually grew by 4.7%. Now again, I ask you, are you hearing that good news reported anywhere? Well, no, of course you're not. And you're not going to. Listen, no matter how strong and resilient the U.S. economy really is, the media won't acknowledge that. But you don't need the media. Watch the data yourself. And over the coming months, especially pay notice to what I think could be some very positive developments. Watch for the Fed to cut interest rates. I think we're going to get clarity on the tariff situation. We're likely to see some final resolution on the budget and tax policies going forward. And finally, and to me this is the biggest one of all, I believe we're going to start seeing very positive impacts from the deregulation that's taking place. And so for now and the foreseeable future, I remain cynically optimistic, and I don't think that's going to change anytime soon. But come on back for future episodes and we'll find out. Until then, as always, this is John Pugliano wishing you the very best returns.